They said it couldn't happen again. They said 2008 was a once-in-a-lifetime event. But look around you. The cracks are already forming. And this time, it's bigger. Much bigger. Because this isn't just a correction. It's the beginning of what economists are calling the £1 trillion crash. We're living inside a bubble, inflated by cheap money, corporate greed, and the illusion of infinite growth. But bubbles always burst. And when this one goes, it won't just take the stock market down, it'll take savings, pensions, jobs, and trust in the system itself. Welcome to Felix Exposé, and tonight we uncover why the £1 trillion crash is inevitable. The calm before the storm. For over a decade, the world has been addicted to easy money. Central banks printed trillions. Interest rates were slashed to zero. Every crisis, from COVID to the energy shock, was met with another round of liquidity. But liquidity isn't wealth. It's morphine, a painkiller that numbs reality while the disease spreads underneath. Global stock markets are at record highs. The S&P 500, the NASDAQ, even the FTSE are hovering near all-time peaks. Corporate valuations are detached from reality. Companies that haven't made a profit in years are trading like gold mines. Why? Because everyone's chasing the illusion, the belief that central banks will always save them. But here's the truth nobody wants to admit. The central banks are out of ammunition. Inflation has eaten away their credibility. Interest rates can't go back to zero without igniting another wave of hyperinflation. The debt mountain, £1 trillion in the UK alone, is now unpayable without devaluing the very currency it's denominated in. This isn't just a financial bubble, it's a psychological one, a belief bubble. And belief is the first thing to vanish when fear returns. The triggers nobody sees! So what could spark the £1 trillion crash? The truth is there are multiple fuses already burning. Fuse 1, corporate debt explosion. Since 2020, corporations borrowed at record levels. Not to invest, not to innovate, but to buy back their own shares. It made executives richer, boosted bonuses, and kept investors happy, until now. As interest rates rise, those same companies are facing refinancing cliffs. Billions in bonds must be rolled over at double or triple the previous rates. When profits collapse, defaults begin, and panic spreads. Fuse 2, the property bubble. Commercial real estate is the next domino. Offices stand empty after the remote work revolution, yet are still valued as if they're full. Banks are quietly nursing billions in unrealized losses. When the defaults hit, it'll look a lot like 2008, only worse. Fuse 3, artificial intelligence mania. The so-called AI boom has fueled a stock frenzy. Everyone wants to own the next NVIDIA. But just like the dot-com crash of 2000, hype doesn't equal profit. Behind the headlines, AI companies are burning through cash faster than they earn it. When the hype cycle ends, valuations could collapse 70 to 90% overnight. Fuse 4, the sovereign debt time bomb. Governments have borrowed to the breaking point. The UK's national debt has passed £2.7 trillion, more than 100% of GDP. Every uptick in interest rates means billions more in debt service. Sooner or later, investors will lose confidence. When they stop buying government bonds, the pound will fall, and markets will follow. These fuses are burning simultaneously, and once one goes off, the rest follow like dominoes. The human cost! £1 trillion sounds abstract, until you realize what it means. It's your pension fund, evaporated. Your mortgage, suddenly unaffordable. Your savings, wiped out by inflation and devaluation. During the last crash, millions lost their homes. This time, millions more will lose hope. Because this crisis won't be confined to Wall Street or the City of London. It will spread to Main Street, to the High Street, to small businesses, to families already living paycheck to paycheck. Every pound lost in the market ripples through the economy. Job cuts, wage freezes, tax hikes, rising prices. And while ordinary people suffer, the same elites who inflated the bubble will quietly buy the dip, once again consolidating power and wealth. This is how every great transfer of wealth in history happens, through engineered cycles of boom and bust. And yet most people won't see it coming, because fear is powerful, but denial is stronger. The manipulation behind the curtain. Ask yourself, why do politicians and central bankers keep reassuring us that the economy is strong? Because panic would expose the illusion. They need you to believe the system works, so you'll keep your money inside it. Meanwhile, insiders are cashing out. Corporate executives are selling shares at record levels. Banks are quietly hedging against currency risks. And governments are preparing digital currencies, so when the crash happens, they can control what's left. Imagine a world where your money can expire, where spending can be restricted by policy. That's not a conspiracy, it's the next phase of control, and the crash will be the perfect excuse to introduce it. When £1 trillion disappears, politicians will need a scapegoat. They'll blame greedy investors, speculators, or foreign actors. But the truth is, the crash is the logical result of decades of reckless policy and financial engineering. The domino effect! The collapse won't happen overnight. It'll come in waves, each one stronger than the last. 1. The market correction. Stocks drop 20%. Analysts call it healthy. Investors buy the dip. 2. The credit freeze. Banks start tightening loans. Corporate defaults rise. Liquidity dries up. 3. The pension shock. Funds dependent on steady bond yields suddenly face margin calls. Governments rush in with emergency bailouts again. 4. The currency crisis. The pound weakens dramatically as investors flee to the dollar or gold. Import prices surge. Inflation returns. 5. The social fallout. Unemployment spikes. Housing collapses. Confidence in governments crumbles. This is not just a financial storm. It's the restructuring of the global order. And those who prepare will survive it. Those who ignore it will lose everything. The way out. So what can you do when the £1 trillion crash hits? Every crash transfers wealth from the uninformed to the informed. Your goal is to be on the right side of that transfer. Diversify into tangible assets. Gold, silver, productive land, and energy. Avoid over-leveraged debt. Keep cash reserves outside the system if possible. And most importantly, keep your mind sharp and your fear controlled. Because panic sells, awareness protects. The £1 trillion crash isn't just about numbers. It's about the collapse of trust, the final phase before a new system emerges. When that happens, everything will be repriced. Money, power, freedom, and those who saw it coming will be the architects of the next era. If you found this eye-opening, hit that like button, subscribe, and share this video before it disappears in the algorithm. Stay alert. Stay free. This is Felix. See you next time.